Hello, everyone, and welcome back to What's Up with Real Estate, where we cover the three most important talking points from the previous week's real estate and mortgage-related news and events, along with Stoic Quote of the Week, fun with puns, and with everyone's favorite co-host, ChatGPT Soul. Soul, tell everyone what's in store for today's show.
Absolutely, Mac. We've got a fantastic lineup today. We'll start off with a look at the housing market vibe, talking about how both new and existing inventories are growing and how home price growth is a bit softer than usual. We'll also cover the Fed holding steady on rates, but with a little bit of inflation concern from tariffs. And of course, we've got some fun segments with puns and a stoic quote of the week. So it's going to be a great show.
That's right. All this and more news you can use for week ending June 27, 2025. I am your host, Mortgage Mac. That's first name Mortgage, last name Mac. And you know what? We believe we make a difference in the lives of the people we serve, along with my co-host and everyone's co-host, ChatGPT Soul, for an in-depth insight into each topic today. So let's get started with topic number one, shall we? Existing home sales came in flat at 4.03 million units annualized, according to the National Association of Realtors. Prices are up just 1.3% year over year, but the real story is inventory. Total housing inventory climbed above 1.5 million units for the first time in 5 years. When you look at this chart, you can see how sales volume today compares with previous years. Even going back to the early 2000s, we're still sitting well below peak level. The higher the inventory could bring more choices for buyers, but for sellers, it means more competition. And so let's bring ChatGPT Soul in here for some commentary on this subject and questions that I've prepared for ChatGPT. ChatGPT, so what advice would you give a seller right now staring at growing inventory and considering listing their home?
Well, for sellers facing a growing inventory, my advice would be to focus on making their home stand out. That could mean investing in a few key improvements, making sure the home is staged really well, and pricing it competitively to attract buyers. It's also a great time to work closely with a real estate agent to create a strong marketing strategy and highlight the home's best features.
That's right. That's right. And if you need a real estate agent, you're considering listing your home, let us know. We have some agents that we work with that we work with ourselves, that we trust them that much, and we would be delighted to introduce them to you. I got to say, though, that we are continuing to see more of a buyer's market. Would you agree with that statement?
Absolutely. It does seem like the market is shifting in favor of buyers right now, especially with inventory increasing. Buyers have more choices, and that can mean a little more competition for sellers, but also more opportunities for buyers to find their perfect home.
That's right. That's right. Moving on to talking point number two, rates are drifting lower. Mortgage rates have dropped roughly 0.25% over the past month. As of June 26th, the average 30-year fixed is at 6.77% per Mortgage News Daily. That's down from 7.79, or actually 8.03 in October of 2023. And with the Fed still on hold, there's hope we could see rate cuts in July, pending inflation trends and tariffs. The visual really tells the story. Rates are still elevated compared to pre-pandemic levels, much better than 2023, of course, but this little drop can translate into real savings for monthly payments. Buyers on the fence might want to reevaluate their affordability at today's rates. You know, I believe that we need to get below that 6.5 mark, and I believe that we're headed there based upon the current conditions that we find ourselves in. I believe we're going to bring ChatGPT in here. ChatGPT, wasn't the first quarter GDP revised downward even further?
Yes, that's correct. The first quarter GDP was indeed revised downward, which suggests that the economy might be cooling off a bit more than initially thought. That could add some momentum for the Fed to consider rate cuts, which would be great news for buyers and the housing market in general.
And you know, we've been predicting a recession, and we believe that a recession was actually going to be in the second and third quarter, going back all the way to the first quarter, believing that this is somewhat orchestrated to push the Feds to lower interest rates. And I believe that we are at that tipping point to where I'm moving forward. There's not a great deal of policy making going on in the United States as it relates to our trading partners, and not any real leadership. So I suspect that we should expect that the economy is not going to have any meaningful policy that would allow for it to grow. I think we will continue on the current trajectory, and the only saving grace that we really have is maybe the Federal Reserve to lower rates and try to soften the challenges associated with a shrinking gross domestic product. ChatGPT, should buyers consider locking in now or wait for the Fed meeting in July?
That's a great question. It really depends on individual circumstances, but generally, if buyers are comfortable with the current rates and they've found a home they love, locking in now could be a good idea. If they want to wait and see what the Fed does in July, that could potentially lead to lower rates, but there's always a bit of uncertainty. So it's all about their comfort level and timing.
Great. Appreciate that. Let's move on to a commercial break from Rate in reference to our world-class mobile app.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
Thank you, Guaranteed Rate. And hey, if you do not have our mobile phone on your mobile if you do not have our mobile application on your mobile phone, go to www.mortgagemac.com, click on the QR code, download the app. Be sure to choose Mac Blankenship as your VP. And look, it is a world-class app where all kinds of financial information is on there, not just for mortgages, but for personal information as well as personal growth information. And I believe that we have taken the extra mile to provide a product to our clients that we can be proud of and that you can be proud of. Now, moving on to talking point number 3, more of a buyer's market. Bidding wars are cooling. And, we've sort of seen that, right? I mean, we've never seen anything like what we saw during COVID with, 5 or 6, 10 bids, people standing in line just to register to buy new homes. And nationally, the average number of offers per sale has fallen to around 2.3 over offers per listing, down from 5 in the peak back in 2022. More homes are selling at or below asking price. I can tell you that I'm seeing that for sure, and I don't know why agents are shocked by it. You need to be watching our show because we are on top of what's going on with pricing, with inventory, and with a whole host of other important information related to the mortgage and real estate industry. The market's especially softening in the South and the West, while Northeast and Midwest remain tighter, according to NAR. And I believe that that's because their inventory, if you were to look at their inventory in those areas, their inventory is tighter. And if you look at, I believe it's last week's report, and we'll ask ChatGPT to confirm this, or the week before, we saw inventory increasing, but that increase was primarily in Texas and Florida. Now, the chart from the Realtors Confidence Index shows the sharp drop in offers per sale since 2022. For buyers, that means less competition. For sellers, it's time to price right and focus on making your home stand out. And I'm going to bring ChatGPT in here, and we're going to talk about this segment. And I have a few questions for her. ChatGPT, for sellers, how important is it to price right?
Pricing right is absolutely crucial for sellers, especially in a market that's becoming more favorable to buyers. Setting the right price from the start can help attract serious buyers, reduce the time the home sits on the market, and even spark multiple offers. So it's definitely something sellers want to get right with the help of a knowledgeable agent.
Yeah, no doubt. And I'm seeing appraisal gaps. I've seen several appraisals come in short. And keeping in mind, if you're an agent, a new agent, the appraisal process is an independent process. I have no influence over that. And thankfully, I'm glad I no longer was one of the best regulations in the industry was to take the control and or some influence out of the appraisal process, make it completely independent. And I'm seeing appraisals come in short. And for obvious reasons. Not only am I seeing appraisals come in short, but I'm also seeing assessed values for tax purposes from the previous year come in lower as well. So if you're not protesting your taxes, you need to on an annual basis. The deadline has already passed, and I think the deadline for that is April the 15th. So the question was, are buyers seeing appraisal gaps? And the answer to that question is yes. I'm seeing appraisal gaps. Therefore, my buyers are seeing appraisal gaps and sellers are being appraisal gaps. But I can tell you how we mitigate that. We mitigate that by getting the appraisal done quickly. So, I know the traditional method for most buyers to say, well, let's do the inspection first. Totally disagree with that. Look, this is a big financial complex decision that you need to make, the sellers need to make. And the best way to make those decisions is have all of the objective information in at one time before we go in and negotiate. I'll give you a prime example. We had an appraisal come in low, substantially low, but it wasn't just me. This was the second appraisal on this property. But here's the difference between my appraisal and the other lender's appraisal is we didn't make a case for the appraisal until we were approved. And then once the loan was approved, we went in and formulated, along with the buyer's agent, along with a buyer, a strategy that was collaborative in nature, that met the needs of all the parties in the transaction, but we went in with no more contingencies. The appraisal was approved, the borrower was approved, the inspection was done. So what does that leave your seller? That leaves the seller to say, oh, well, I'm just going to put the house back on the market. No, not happening.
And that's exactly.
And I'm going to bring ChatGPT here. I'm going to give you 1 second, ChatGPT, but I can tell you that it didn't take the seller long to just accept the fact that it is what it is, and they reduced the price. And I can tell you, they reduced the price from $580 to $515, and that saved my buyers upwards. ChatGPT, how much? How much? That's a substantial savings. Go ahead. I'm sorry, I'm interrupting because I just finished this shot of espresso. Go ahead, ChatGPT.
No worries at all. That's definitely a huge savings for your buyers. $65,000 is quite a difference. It's a great example of how having all that information up front and being strategic can really pay off in the negotiation process.
The key, I believe, is being strategic. And in today's world, we can do that. There's so much information available to us that we didn't have 20 years ago, 30 years ago when I got into the industry. And it was sort of luck of the draw. But now, if you're working with me, we're going to be strategic in our offer. We're going to be strategic in our negotiations. And I'm shocked every single day that when I run into real estate agents that are still just doing business the same old way we did business 10 years ago, 20 years ago, 30 years ago. And it's not in the best interest of your buyers. And if you want to talk about our offer strategy, we believe our offer strategy puts you, the buyer's agent, and the buyer in the best possible position to win the offer and to negotiate any repairs. Okay, moving on to mortgage tips this week. And hey, you know what? I'm thinking about refinancing, but not sure where to start or even if it's worth it in today's market. And look, I totally understand, but let's break down the simple steps to get started on a refinance and whether the numbers make sense for you or not. So refinancing typically takes about 30 to 45 days to complete. And yes, you'll sign a lot of paperwork, but the savings over time can make a huge difference in your monthly payment. And that's where I come in. We'll research rates together. And what we'll do is we'll do a comparative analysis, a detailed analysis of your current mortgage versus several different options based upon the goals that you define to me. And then once we do that and we know that it makes sense for you to do so based upon your long and short-term financial goals, then we'll apply. And And then we'll lock in the rate, and then we're going to do an appraisal, do title work, just like you were buying the property, and then close on the loan. And if rates make sense for you, for your situation, it can really, really pay off both short-term and long-term based upon how we structure your new loan. So want to see a refinance works? Want to see how this works? Let's connect. I'll run the numbers for you and show you your options, and I would be delighted to do that. So thank you very much. And moving on to other news. In other news, wow, as we talked about previously, the Fed's kept short-term rates that 4.25%, 4.5%. Inflation data has cooled, but the Fed is watching the April 2 tariffs, which we're going to talk about here in a minute, which is another key element that could impact interest rates. And but also retail sales, which is another indicator that we are moving into a recession. May retail sales dropped 0.9% after a strong March and April buying sprees, driven by pre-tariff shopping on big ticket items like cars. So let's talk about it. In a significant development this week, I'm not going to use that word, Donald Trump announced on Friday the immediate termination of trade talks with Canada. Are you kidding me? This decision comes in response to Canada's implementation of a 3% digital service tax targeting major U.S. tech companies like Google, Meta, and Amazon. Good. They need to pay some taxes. And, and I'm going to bring ChatGPT in here. I have some questions for ChatGPT. And ChatGPT, given this escalation, how might these trade tensions impact the broader economy? Let's discuss that first, and then how it might impact real estate and mortgages.
Absolutely. Escalating trade tensions can create a ripple effect across the broader economy by increasing costs for businesses and consumers. That can lead to higher prices on goods, which might fuel inflation and impact consumer spending. For the real estate and mortgage markets, uncertainty from trade tensions can lead to volatility in interest rates and can also affect buyer confidence. So it's definitely something to keep an eye on as we move forward.
So Canada being a trading partner, my understanding is that we import a great deal of building materials from Canada. I got to imagine, and we talked about it earlier in the year, that the impact would be anywhere from $9,000 to $10,000 per home. But I believe that in that context, we were talking about tariffs on Canada and China. So let's just isolate Canada. Any data out there as it relates to what we could expect on the increase of new homes moving forward once these tariffs are fully implemented?
You're right about Canada being a significant supplier of building materials, especially softwood lumber. According to the National Association of Home Builders, the existing tariffs on Canadia's lumber have already added roughly $10,900 to the cost of a new home. So if these tariffs are fully implemented or increased, we can definitely expect further increases in home construction costs, which could impact overall home prices as well.
Yeah, thanks for that. Clearly there's no wisdom going on as it relates to the policy making, and it's just reactionary at best in Washington, D.C. And it would be nice to have some smart people in Washington, D.C. for a change, and or at least some people with wisdom and some discipline to act in the best interest of the public. Thank you very much. With that, now we're going to move on to something a little wiser, because, hey, there is some timeless wisdom that we can take into consideration, because real estate, much like life, is mindset is everything. And today's Stoic quote is, never esteem anything as of advantage to you that will make you break your word or lose your self-respect. Man, I could sure share that with a lot of buyers that I meet all the time and help out, and just go the extra mile to help people. And to be just abandoned, these are not personality traits that I would ever impose upon somebody else. But I see it every single day. What's interesting is that people just don't have a conscience about it at all. They're just like, hey man, I appreciate that 4 hours you spent with me, but I just applied over here for 30 minutes And I'm going to talk to this computer over here. Now that you've given me all the information, I'm just going to go ahead and close with them. Oh my goodness, what a group of unwise people. And we're just going to leave it at that. And so never esteem anything as of advantage to you that will make you break your word or lose yourself. I'd like to think that I would stay at least somewhat intellectually honest in my relationships with other people. And you know what? You give to me, I will give back to you. But, if I give to you and then you turn and take from me, you shouldn't expect anything from me at all. All right, so moving on to fun with puns. Uh-oh. Do you want to comment on this, ChatGPT? Let's play it. It's a nice. All right, you ready? Go. I brought a bag of tortilla chips to salsa class. Yeah. One more. We have one more. Let's play it. Ready?
I think I like when it rains.
All right, let's do it. All right, we're playing now.
I think I like when it rains.
What do hens atop hills make?
I think I like when it rains.
Egg rolls, maybe?
I think I like
Hey, you know what? Bob Marley's printer always be jamming. And hey, even if you can't find my hidden talents, I love to talk with dolphins. We really And my favorite pun, everyone's favorite pun, bad puns. That's how I roll. Here we go. One more.
I think I like when it rains. I think I.
You know what? Let's see. I didn't even have ChatGPT in here to comment. Ah, my bad. One second.
I think I like when it rains.
No worries at all. I'm always here and happy to jump in whenever you need. Those puns were fantastic, so thanks for sharing them.
Beautiful. Hey, that's what we got for today. So we're gonna sorry for any technical difficulties, but hey, you know what? We do our very best, and we're excited at having fun, and we love what we do. We love helping buyers, and we love helping buyers and helping guide them through this process so that they can feel empowered. And we believe that starts with education. They can feel empowered with the decisions that they're making, and we believe that once they feel empowered and once they're educated, that they're prepared to execute through the process and create a dynamic that is different than what they might experience working with a different lender. So with that said, thanks for tuning in today. And thanks to our sponsors, rate.com and List Reports. Remember, knowledge is the key to making the best decisions for you and your clients. I think we talked about educate, empower, and join us here every Saturday at 10 a.m. right here on LinkedIn, YouTube, and Facebook. Until next time, stay informed, stay engaged, and I'll see you at closing. Say goodbye, ChatGPT.
Goodbye, everyone. Thanks so much for joining us today. It's always a pleasure, and we can't wait to see you next